Welcome to Build the Future Academy. Today we are going to discuss 1.2 under the topic of bad debt. Mind you, this topic is still a challenging topic or adjustment in the income statement. So this tutorial is going to teach us how to calculate the bad debt expense that need to be recorded in the statement of comprehensive income. Alright, let us start with this information that is given here. This information for bad debt and the amount was taken from the trial balance. So this information we can get it from the trial balance. Okay, let us go straight to the transaction. The transaction says a debtor who owned 15,000 was declared bankrupt, meaning this amount was a total amount that was owned by a debtor to the business. This is the total amount. If I'm saying the total amount, meaning in percentage, it's 100% amount. Alright, let us continue. His estate paid 60 cents for every rent owned, meaning out of 100% that the debtor was owing, only 60% the debtor was able to pay, meaning we are going to subtract the amount that, or the percentage that the debtor was able to pay. We can change this cent into percentage. Don't be confused. So I'm saying this was 60 cents for every rent. So I'm just going to change cent into percentage. So meaning we are left with only 40% here. Let us continue with our information. They are saying the amount that was paid, 60% of 15,000 rand, was properly recorded. It was properly recorded. And now the balance of his account must be written off as irrecoverable. This means that if they are saying it must be written off as irrecoverable, it means that this is a bad debt. This is a bad debt. Right, so what was the balance when we say 100 minus 60 that was paid? The balance is 40%, meaning 40% of 15,000 rand. It is our bad debt for this financial year that need to be added together with the bad debt that is given in the information or in our trial balance. So meaning this is our bad debt. That means with different color here. This 40% is our bad debt, the balance that we have. Let me use this one, the bad debt. Alright, so now the question, how do we calculate the bad debt since we have all the information? Alright, you are going to take the amount that was owned by the debtor, 15,000 rand. This is out of 100%. So we are going to say we want only 40% out of 100% of the total that we have. Then it's going to give us exactly how much was supposed to be written off. 15,000 times 40 divided by 100. So the amount that was supposed to be written off is 6,000. This is the amount that we can call a bad debt. So what is going to happen? Let's say, for instance, we're preparing the income statement or statement of comprehensive income. We are going to write bad debt. You can write it in full and then open bracket, take the amount from the trial balance of the bad debts, 13,700, and then you add the additional bad debt that we found in the additional information, of which is 6,000 rand. So once you do this, we are done. It's going to give us the correct total expense of the bad debt that's supposed to appear in the statement of comprehensive income. I'm going to say 13,700 plus 6,000. So this is 19,700. We are done. So this is the total expense of the bad debt for this financial year period. Thank you so much for watching. We are going to continue in the next tutorial for information B.